Hello, everyone. I'm Jean-Claude Beyond Mystic, and welcome to today's Beyond the Chart episode. With me, of course, is the one and only Martee Hibbs. You can find his work at bullshift2020.com. Martee, welcome back to the show. How are you, man?
Hey, good, really good, JC. Getting ready for the holidays, of course. It's bit of work, bit of play. It's
Right?
fun, and the markets are really exciting. I mean, like Cliff said, $100,000 Bitcoin parties.
We're already here.
We're here.
That's funny because we were talking about that for the last couple of months, preparing for this eventuality that we hit the 100K, and it went really fast, and now we're above that number now. And on top of that, what seemed to be conjunct with those old data sets was the implosion of the Democratic Party. We're seeing that in the States. And of course, we're seeing that in Canada here too in the last 48 hours. Let me start you there, your fellow Canadian.
Yeah.
Crazy shit show of a day yesterday. This, of course, started on Friday or Thursday of last week, where Prime Minister Trudeau presumably had demoted Freeland here ahead of the fall economic outlook. And she decided on Monday morning that, look, no, not having any of that. I'm going to quit. So there seems to be a lot of confusion as to what just happened. Was this a move from Freeland to prevent Trudeau from installing maybe Mark Carney? There's a lot of discussions to that. But in the last number of hours now, everybody, including the Toronto Star editorial board, are asking for Trudeau's resignation. So I think this is a move that backfired in his face. But at the same time, our dollar is at the lowest trading level with the U.S. in about 21 years right now. We're sitting, as the chart suggests here, I just put it up on the screen, at $61 billion in deficit right now per this economic fall statement, far surpassing the guardrail of the 40 billion deficit that they had imposed on themselves the last time they were in the news. What do you make of the shit show here happening in Canada, Martee?
I'm not surprised at all. I mean, we've watched it unfold, and it's just a matter of I was hoping we would get to the end faster than we did.
Right.
It's like a slow burn. It's painful to watch how slow it is, but you can see it coming. And again, like we have some friends that are kind of, I would say maybe you could call them insiders that kind of keep you in the loop. And I mean, people have no clue what's really going on.
No.
It's all theater. And it's made for the public to keep them entertained, I guess, for a while. But it's funny because there's a delay between what even social media knows and what mainstream media is now starting to finally admit, right? So we're going down that dark road, and our target we had back about a year ago. We said we're looking 65 to 68 on our dollar.
Oh yeah, I think we're sitting at 69 this morning.
We're at 70 right now.
Yeah.
We may get a little reprieve here in the next week or so, maybe, but just a little bit of a one. And then I think we're headed to the 68. And then ultimately, I think probably out into the spring, possibly even as low as 65. And that's
we'll bring the chart up in just a moment.
Okay.
Before we do that, just getting back to the politics of things, we had rumors, again, just for the Canadian interest in our audience members, we had rumors over the last 6 months or so that they were preparing the ground for this return of Mark Carney. And that was interesting. Of course, he was the Bank of Canada governor before. Then he went to do the same post in England. Then he worked on a lot of these crypto startups. And this whole return scenario was suggesting that maybe Canada was preparing somehow to install a CBDC and would have Mark Carney kind of at the head of that particular initiative, even though the Bank of Canada just announced last month that they were dropping their CBDCs, that Canadians didn't want it. So it's kind of weird and nebulous what's happening right now. What are your thoughts on Carney's return into Canadian politics right now?
Well, I think the main reason that they would do it is they would probably do to try and strengthen, or at least to appear to strengthen Trudeau's stance, because let's face it, I mean, you can't get much lower than he is unless you're on your belly, right?
Right.
So they thought maybe because Carney was such a star when he was in Canada before he left, that he would revive the party. Right. But again, I still think it all boils down to politics. And the sad part is, I'm going to get some hate mail for this, but it doesn't matter if we get the other guy, Polyev, in. There's an agenda, and they're pushing to try and get to that point. The only thing I'd have in common with some people is it's not necessarily going to work out that way. Now, CBDCs, by them saying that, I don't believe a thing they say, But more importantly, you don't need a CBDC with tokens that are already created and in play. Things like Digibyte or XRP, those will suffice to do anything that a CBDC would do in disguise. And then my other belief is the old problem, reaction, solution, which means basically, if you go to Canadians today, especially because they're so pissed with the governments, and ask them to accept something, they're going to say, get out of here. I don't want to do it. Whether it's, this, or if it's a new monetary base, they're just annoyed. So the way I believe this system works, and it's not just Canada, we're just one little cog in this wheel, because this is universal what we're experiencing. I believe what's going to happen is here, we're going to be put in a situation where we're going to ask for it. Now, I know people will say they won't agree, but think about it, JC. If it comes down to it that there is a new monetary base, whether it's something like a digital currency, it doesn't have to be a CBDC, but it will be centralized because they want control of it. If it gets to that point, all they have to do is entice you. So, for example, let's look at the U.S. for a second. When the U.S., when they came up with the COVID regulations in the U.S. years ago, what they did is basically said that everybody that is a government employee has to have the treatment
product.
And the problem now is where you've got Elon coming in. We know just from reading the tea leaves here that Elon plans on doing the same idea with the excess employees in the U.S. So that means right away the bullseye is on anybody that worked in the government, because we know even in Canada, you can't go around the corner without running into some kind of a civil worker, whether it's post office workers or the motor vehicle department, of motor vehicles, or the licensing department, or married. Like, there's government offices which are very redundant on every corner. And with the new technology that's coming in, it looks like, to me anyway, I've thought for years, this is going to replace a lot of workers.
There was a think tank that put out a report, I think in 2017 or 18, and they were looking at smart contracts, new technologies coming up, and they were suggesting that by 2030, I think their statistic was that government staff would be reduced by 80%. That most of it could be done by these new technologies.
I think it'll be before then, even I personally think.
Yeah, that's very possible. When you said this is worldwide too, let me just share this with the audience members. So not just Canada here, we appear to be having some issues with the plan, as you suggested here. It's happening the same thing. Germany is Chancellor Scholz lost his no confidence vote, paving a way to an election here. This was yesterday. And also in the UK now, a lot of turmoil there for the Labour Party refusing to confirm if the 2025 local elections will take place. So they're pushing back here some electoral processes here. A lot of people are suggesting or questioning whether or not we still live in the democracy. So there's a lot of weird shit happening. But all of that is having an effect on the markets, as you just said. We topped 100K on Bitcoin. We're going to look at that in a moment. We're going to look at the US dollar. A few guys also. I want to take a quick look also at the loonie, then maybe gold and silver, maybe a few cryptos, and answer some questions for the audience members here today. So why don't we start, because we're looking at the Canada stuff today on the political level. If you want to bring up your chart, Marty, here's your trade program. Yeah. Do you want to bring up the Canadian dollar here and share to the audience here where you see it going here moving forward? You just mentioned we're almost on target to what you had a couple of months ago, trading at 79 cents, 68 cents. I think the lowest today was 69 when I checked earlier this morning.
Yeah, we're below the 70. As you can see, there were 69.82.
Yeah.
Now, this barrier here was a major barrier that we broke a while back, and our target has been 65 to 68 going into the spring. Well, the way we're going, we'll probably see 68 within the next month or two. However, having said that, we have a really short-term signal right here today suggesting that by this week, it's a weekly candle, that we could get a bit of a pop, a bit of a reprieve. But a reprieve just means profit taking, means we may go back above 70 for a day or so, but it's not over, at least not according to what we see. And we're looking for possibly as low as 65, 66, 65 handle between now and the spring. Decimation of the dollar, because the thing is, people have to understand, we're relating this here, what you're seeing is the dollar compared to one thing only, really, which is the US dollar. And the US dollar, contrary to what people are thinking about it failing, It's not showing up in the charts that way. And the reason it's not, JC, is people need to understand when you're looking at that dollar basket, it's not the dollar. It's not the US dollar. It's the dollar versus other currencies.
Mm-hmm.
We spoke about that once before. We said if you're comparing dollars to houses or dollars to cars, it's a complete different chart when you're looking at dollars compared to the yen or dollar compared to the Canadian, because what you got is a bunch of failing fiat currencies compared to each other. So they go, oh, it looks great. When in fact, it doesn't.
It's the cleanest shirt in the dirty basket.
Exactly. So it doesn't look good, but you can see that major structure was broken back probably October of this year. And it's significant. And as I said before, the last time we were here, I think it was around the year I got in the markets back in 85. We had the bond market came apart because interest rates were so high. I think the US bond was trading at like 55 cents. And the exchange rate in Canada was about $1.55, I think. And if we get to 65 cents, that's what the exchange, like right now today, I'm going to guess you're looking at an exchange rate of about 142. It's deceiving because people go, oh, it's 30 cents. No, it's not, because you divide it the other way and it translates into $1.43. So if you're importing from the US, every dollar is $1.43 Canadian that it's costing us. So
now,
imports.
For the people looking at the dollar right now, like we'll do this later. I want you to show us a comparison USD versus Bitcoin to actually see the reality here of where the dollar is going, as opposed to being compared to these dirty shirts in the other basket. But for the Canadians right now, there was I had a text earlier from Cliffy maybe 2 days ago, and he was saying that it appeared that Canada could be involved somehow in a first domino that could trigger a derivatives bomb or a derivative explosion. You just mentioned the bonds now. Is there a critical line in the sand also here that could expose some key players that could have these unintended consequences? Could Canada be part of some type of huge domino here at that level?
Well, it could be, but here's the thing you got to remember. Like if you go back to 2008, there was a line in the sand and we thought it was the end of the world. And everything, and here we are 10 times higher, like with regard to the pricing of that. So there's never a line in the sand. The truth comes this way, in my opinion. When people stop accepting it, when countries stop accepting it, that's when you have to be worried, because as long as these countries play the same game and keep like the US printing money, and when I say printing, like just creating new money, which destroys the value of your dollar, because if you have a dollar in your pocket and they print 10 more for every one somebody's got, that means it's taking more of these dollars to buy the same amount of product. So that's where the illusion of inflation comes in. It's not that the price of cars are going up. It's that now you're competing. So for example, the US right now, because of all their damage with all the hurricanes and issues they've been having, they're coming across the border and buying the vehicles.
Yeah.
They're only paying 70 cents on the dollar for the same vehicle that we're trying to buy. So that creates a major shortage short term, even in our regular vehicles. That's why the price of a used vehicle today is like $25,000 for just a 5-year-old vehicle.
Right. Let me get into the US here just a moment. So after Trump was elected, he put out a statement that he was going to basically impose a 100% tariff on the BRICS nations or any nation that was trying to de-dollarize, presumably here in a move to protect the dollar hegemony. Cliffy put out a video a couple of days after saying, hey, Trump fucked up. This is not going to work. It's going to backfire. And lo and behold, in the news here today, will Trump's tariff backfire and strengthen the BRICS, right? So there's question to whether or not that's going to work. And it appears that this could be part of the multiple resets we're going to live here, not just in the United States, North America, but the rest of the world. Where do you see this Trump tariff thing hitting the US dollar moving forward? If you want to change your chart, and let's look at the US dollar for now, what are we seeing? And is this helping, or is this going to maybe further strengthen the people who are trying to move away from the US dollar here, as this infrastructure has been built here for maybe the last decade or so? What do you see?
Okay, I have to put yourself in my mindset, because I haven't changed it, and this is why I'm on the same track. And until I really feel like I need to change the mindset, it's all part of the plan, in my opinion. Like they're doing things to get the reaction that they need. So, like, can I just stop for 1 second? I don't want to go backwards. Remember, we talked about those government employees that we're talking about possibly tens of millions being laid off in the US.
Yeah.
Now, normally, if that would happen, what do you think would happen in the U.S. with the people if they laid off tens of millions of civil servants?
Oh, it would crush the economy. A lot of people's
What
disposable
would the
income.
reaction? Would the reaction of the people be?
That the government can't pay them, can't afford them, that we're broke.
What would they do?
Who, the government or the people?
No, the people.
Ah, there's a lot of scenarios there, and that's what the RCMP secret report was also saying to Trudeau a couple of months ago here. People would revolt in a big way.
Exactly. Now, what if we were to say, hey, don't worry about it. Remember COVID? Go home. Yeah. We're going to give you, are you ready for this? How about universal basic income to the tune of maybe $75,000? Would they think they might like that?
Yeah. Yeah.
Now, how would they do that? Oh, they would do it, but hey, guys, we got to get the paperwork together. Here's the account. Get your picture taken. How about maybe the digital ID that Elon alluded to just a few weeks ago to control the border crossings, that to sort out the illegals from the legals.
Right.
So what happens is you get into the system and people are really excited because, wow, I'm going to make 75 grand for sitting home. But think about it. This is where it comes back to what we just spoke about with inflation. If you're getting 75 and I'm getting 75 and everyone's getting 75, what happens is all of a sudden there's competition for
there's a lot more money chasing the same goods.
The same goods, exactly. Now what happens when the inflation runs up, like lumber went up 700%? It hits a ceiling, because the ceiling is, hey, we need more money down here. Sorry, there is none. There's no more money, because that was the new system. When they say, here's what you're getting, deal with it. So for a time being, I think it'll be really attractive to people if that's the scenario that they roll out to introduce the digital ID, but it's going to wear off and people are going to wake up very soon and realize I'm trapped in this new system. And all of a sudden it's not as attractive as they told me it would be, because now my dollars are competing with everybody else. So it's, again, the problem, reaction, solution. People react.
Do you think this tariff thing is on the same track here? It's basically a controlled demolition here to obtain more control moving down the road. Okay, so go ahead. So let me bring up the US dollar right now also on the chart. What do you see happening now? For where are we at compared to our last show, and where do you see moving forward, let's say in the next 2-3 months?
Okay, well, I think it would have been the same thing. The last time we were talking about bouncing between these major structures. Now let me just grab it here. If I pull it back like this, you can see here that we've been in this structure here for about a couple of years. It goes back to July of 23, right? But if you look at this chart here, that's not a pretty looking chart, because if it breaks, this is a structure we talked about. If it breaks to the downside, this thing is heading down into the low 90s or possibly a lot lower. But on the short-term chart, it's hitting its head above at the top of the range again. And we did put this box in there before it moved up, saying it's going to overshoot just a little bit, got in there, lost it. Now here's the problem. We're crawling back up again, but we're running out of steam. The indicators are suggesting we're getting long in the tooth. It's tired. And if it's tired, if you can look at somebody, remember the battling rams that they have for breaking in doors back in Henry's days, where they take a run at it? Well, they're standing in front of the door here trying to knock it in with it. So it's not effective. So it probably needs a decent correction. But here's the main thing I see is that everybody's been so bearish on the dollar for so long that there's still a chance that they're going to get sideswiped. In other words, they're going to be fooled, because any way you slice it, the only currency at the moment in the world that's capable of fulfilling the needs of the derivative markets is the US dollar. Now, I think the time is coming when it'll change, but the BRICS nations is a great idea. And I think they're doing it, as my belief is that it's not because they want to go against the U.S. It's because they don't have a choice. When the U.S. imposes sanctions and rules and restrictions on other countries, all they want to do is say, look, we need to live as well. We have people that are shortages of food and things like that.
Yeah, we want to participate in the economy, and we need another avenue to do so when we're locked out. Yeah.
So again, it's part of the destruction of the dollar, because all roads lead to the destruction, because that's what they want. The dollar is doing its thing. It's worn out. We almost at a point where we have hyperinflation, and we need something more stable. And because it's going to be somewhat of a global system with this new digital ledger technology system, they want to move in this new ledger technology as opposed to the old paper way. And it's just it's a transformation into the new system. And all of these little nuances lead to the same end result.
Right.
Whether it's the threat by Trump with tariffs. And again, I think it's a threat. I don't think he'll impose that. I think it's a threat. It's a bargaining tool. It's the way he works.
Yeah, it appears to be that way. Okay, let's move into crypto for just a moment, and I want you to pull up on your chart maybe the comparison of USD to Bitcoin, a chart maybe for the last.
Okay, I'll give you two.
That'd be interesting. But while you set that up, Martee, let me show this to the audience here. So I was looking at the fall economic statement yesterday, and of course we're now at 61 billion for this Liberal government deficit in Canada, and the dollar itself is at record low, almost record low, 21-year low against the USD. And I'm saying here, it appears Pierre Poilievre was right, and I'm referring to a comment he had made a number of years ago that perhaps Canadians could hedge themselves against inflation by getting into Bitcoin. He wanted to make Canada the crypto capital of the world or investment destination of the world, words to that effect. But when he made that statement, of course, the Liberal Party came out in full swing saying that he was a conspiracy theorist, that he was nuts, that he was wading in the waters of extremism. And they unleashed the mainstream news with all of these horrible stories of these people who had lost money into crypto. And lo and behold, as you just said at the beginning of the show, here we are now at 100K Bitcoin. And I think at the time Poilievre was making that statement, it's probably hovering around 20 or 30 or maybe max $40,000.
Yeah, I believe when they made that statement, it's after we had a big dump in Bitcoin.
The correction, yeah. After
we had what would have happened to us if we had opted in, right?
Yeah, exactly. And so, but at the same time, Poilievre was late to the game, starting to talk about crypto. People like Jason Four, people in my channel, were talking about this in 2008, 2009. So we've seen Bitcoin go from hundreds of dollars to now $100,000. So let's bring up that one of those charts here to compare the purchasing power to USD versus Bitcoin right now.
Okay. Now I can't remember what we had said the last time we were on your show, but I don't want to bore people to death, but basically what we were looking at, our target back in May, June, back here, was that we were possibly going to see $90,000 on Bitcoin by the end of October.
Yeah.
And what happened was, I think we were on around September in your time. We had this big dump here. And I remember Dick on our show says, Martee, I think that's completely off the board. And I said, no, the Oracle still says we're going to do it. But I said, we're probably just going to get back to the old top.
Was that dump also engineered by the U.S. Selling Bitcoin here after Trump said he wanted to make it a Bitcoin strategic reserve? Somebody
I don't think so.
I think we're dumping. No.
Yeah, no. It just, what happens is, like, it's a very thin market because you got to remember there's only a limited number, but even the ones they have are not actively being traded. So you've got a very thin pool to trade. And what happens when the market starts to break structure? A lot of people will panic and sell. And that's why you get these massive big moves up and down, because the volume is not there. Not like, say, the corn market or the soybean market or the dollar market.
What I'm suggesting, though, is that because of the liquidity, then how narrow it is, it's very easy to manipulate. And if you want to create this dump or this falling knife effect, you just need to sell a little bit here in the low hours of liquidity, and you'll have that effect with consumer sentiment. That's the only thing I was alluding to. But at any rate, so we were there for this 90,000 prediction, and we appear to have matched it and exceeded it.
What happened was, here's the date here. This date here that we got back to the top was actually the 29th of October. So we had 2 days left. So we didn't make it. But what happened is on the 31st, it broke out. And 11 days later, we hit our target.
Okay.
I was happy with that. So our target,
for sure,
ultimately we had a 104 to 108 target. Okay. So let me just walk through that with you here. So here's basically what happened. We hit our 104 target right here. And the same day that we hit it, it went back to 92 and then back to unchanged. So that basically was a beautiful candle. It washed a lot of people out, hit our target. Then our next target, believe it or not, was 108. Well, guess what, JC? I'm on your show. And today we hit our target of 108. We got as high as 108, 360. That's where we are currently. Now, short term, what's going on here is this is getting very long in the tooth. So let me I'll try and unpack this a little bit. When I do the analytics, there's basically 3 ranges we do. We do a day chart, we do a weekly and a monthly. And of course, the monthly is the long-term indicators. Weekly are also intermediate indicators. And then the day chart is more for real fine-tuning where we're going in the next few days. Yeah. So right now, what this tells me is we hit our target. We're due this week for a correction. Now that correction just may be back to the $100,000 base or just below it. Makes sense, right?
Yeah.
Our next target going out is up around the 120, 125 level. And I do expect to see that in the new year. Now, having said that,
you're talking spring, you're talking summer?
No. Before summer, way before. I'm talking about maybe January, February, or March.
Okay.
I think this bull run, our consensus on this, mine is anyway, that we're going to see this bull run potentially run as long as May of next year.
Okay.
And when I say that, I'm cautious because once we get around March, we've got to look at this all over again, because we do have a maximum target right now that the Oracle gives us is around the 145 to 155 range. And that goes out to the end of April, beginning of May. You can see there are the markers there. So that's what we see on the Oracle right now. So that may change, because here's what's happening. If we don't get the correction this week that we're anticipating back to about 100, 95, 100, somewhere in this range here, or even to this box, 95,000. If we don't get a decent correction here, it means we could turn around and actually keep going here, and we could actually hit our 120 target within the next week or 2 weeks.
Mm-hmm.
So that's a possibility. But if it does, it's a definite earmark for me that, okay, definitely that's it short term. Take some profit do something like it can't go on like that consistently. So short-term indicators right now are a bit nervous. Check back would be the best thing to do, then back up again and continue on, because the long-term indicators are suggesting at least 3 to 4 months of potential upside in the bull market. It's just the short-term indicators are what's getting a little bit kind of overworked right now.
What in your view would bring it down to, you have another red box there around 85,000, I think it is?
Down here, that would be something tied with what I'm going to talk to you about is the stock market.
Okay.
Because we'll talk about that in a second. But there's going to be a little bit of a black swan event, like something not expected. Right. Because we get the market to break, and I'll show you those charts in 2 seconds now, and it's starting to look like it's following what we're looking for. That could cause all of the markets temporarily to take a dump, because what happens, as I mentioned, when things get really crazy, meaning the markets get volatile, people get nervous and they don't want to lose their money. So they just basically opt out of everything, stand aside. And when you get that mentality, you get some great deals if you're aware of what you want to buy. So if one market is dumping like the stock market and Bitcoin starts to go on gold and silver, people will start selling into it. And that's where you get your real opportunities to get in at a good price.
Mm-hmm.
So just before we go on this, I just want to say again, okay, so short term, we're at our short-term resistance. We could check back. If we go sideways for a few days, don't check back. By the end of the week, we're going to probably push through, and our target is about 125 roughly. So 120 to 130, somewhere in that range. And from there, if we go there in the next few weeks without correcting, then I'm looking for a minimum, at least a $20,000 correction. From that point.
Okay.
Because our floor at that point would be around 100,000, that magical $100,000 mark.
Okay. Let me bring up Max Kaiser's chart also. He put this out maybe 2-3 weeks ago on December 5. His target net right now, he's saying no major pullback until 220. So right now, at that time, this was December 5, he didn't think we would have a little pullback. Although he's saying now here too, well, actually, he's in a different post. He was talking about the hash rate, and given his calculations, he was seeing more of a $250,000 price point for around that May or June. I think he said maybe as late as July. You have it at 150 right now.
Well, 150 is all I see now, but I don't doubt at all 220 is probably the next number. But the Oracle will only give me new targets to try and be more accurate once we've reached certain targets.
Right.
So once we hit this 120, it will fine tune that one from April.
Gotcha.
Much more contracted target, and then it'll add a new one on top of that if there is a new one. That's how it works, right? And it does change.
And if I pulled your chart out to a year from now or 2 years from now, are we in the millions of dollars? Where are we in Bitcoin? What do you think?
I don't see that. I have no way. That would just be total speculation. I have no idea. I'll tell you my honest feelings on it for anybody that's interested. I don't trust anything. I don't trust gold, silver. I don't trust real estate. I don't trust Bitcoin permanently. I do believe it's the thing right now, and it is working. And I believe the properties are there. But and I think we might have mentioned this before. I always mention that I think the derivative markets is a way for these elites or whoever they are, the banksters or whatever that are against it, to take control to a degree by accumulating Bitcoin in the name of their clients. Their clients pay for the Bitcoin. They keep it in cold storage. And at some point, they can manipulate the market enough to crash it quite a bit and say, hey, the fund is not working well right now. We're going to shut it down. They can do that. And by doing that, what they've done is paid you off in paper dollars, and they have the Bitcoin. So you might ask yourself why. Well, there's possible two scenarios, in my opinion. They could either take it to have it for the elite monetary system, or they could take it to get it out of circulation so that it's not a competitor to their fiat money. I believe
to, whatever new CBDC
or whatever, whatever the new thing is, right?
Yeah.
So I believe there's times, and at my age especially, me, Dick, Cliff, we're all up around the same age here. You probably have plans that you want to see in your lifetime, and I can't hold it for 20 years to see.
And that leads to the adage: if you don't hold it, you don't own it.
You don't own it. That's correct.
Exactly.
So the ETFs are a manipulative tool, in my opinion.
For sure. For sure. Okay, let's get into the markets here. What do you see? Where do you want to go next?
Okay, so let's look at the stock market. That's
Cliff here in the chat. He's saying aliens always cause the markets to drop when they show up. We have a lot of drone activity in the last couple of weeks. People wondering where all this is going to lead. So what do you see right now? Who are you bringing up? The S&P?
This is the Dow Jones.
Dow? Okay, let me see.
Now, as you can see here, that was our target on the Dow Jones. We hit a double top. I'll move that out of the way for a second. See that nice double top there? So we were really accurate. If you go back, like our members know what I'm talking about. They're watching today too. They know these numbers are legit, but you don't need to go to our site to realize the old videos. But what I'm seeing here that's a bit unusual, we had a marker back here, and at this point we'd said you're going to see a rip your face off rally like we've never seen before in this marketplace. It was back here, and we've done nothing but go up. Now we're at a point that we're starting to get these big gaps, and they're very, very nervous meaning they make me nervous, because this is a sign of a top is imminent, very close. So what we've got here is today we're heading down into this box here, which is our major support coming off. What I've been saying for months in our Oracle is that we are going to top out in December, possibly in the first part. Now, by topping out, I don't mean it necessarily has to crash. I'm saying it's going to put a marker in there so that if you go back in January or February, go forward and look back, you're going to say, oh, yeah, it looks like that was the top, because we're way overdue for a correction. But this time, I believe the correction will continue for some time, and it will turn into a major reversal. What starts out as a minor correction, it doesn't have to crash from the top. It can slowly sink, stair step down, just like it stair stepped up. And maybe when it gets down here, this is when it really starts to fall, as opposed to from where we are. So what you're seeing here is the beginning of the reversal, in my opinion, of the market. So we should find support. If we do, probably move up to this next box I put in today, and then possibly down and possibly find the structure here going into January. So it's the beginning, I think, of the top in the market. Now, if it starts to move violently, we start getting a big break in the market, you're going to get lots happening. Number one, let me see your face. I got to get back on here. You're going to see a lot of funds, pension funds, get hurt, because a lot of these funds are what we call passive investing. Nobody really trades stocks anymore. What they trade is packages of shit. Excuse my French. That's French, right? Oui. So if they have these ETFs or derivatives, you can't individually trade them, and you're basically stuck in them. Like, do you want aggressive growth or do you want conservative? And the problem is they're not really being traded. And any stockbroker today, in my opinion, are not like the old days. They don't go in and identify a stock and do the analysis and do all the testing on each stock and the company and how competitive they are and what their cash position is and so on. They just look at algos just like I'm doing. They look at a program, and when it says sell, they just sell.
Yeah.
So what happens, one will trigger the other one, and these things start to fall. That's when you're going to get the bit of a panic. But what it's going to do also is hurt a lot of companies, and it's going to hurt the banks. Everybody's going to feel it. And what I think going forward is going to be a major issue is a lot of these pension funds are going to also, I hate to say this, guys, I'm not, this is just my stupid opinion. You don't have to listen to me, but think about it. You can be fearful and say, that's bullshit. Or you can say, well, maybe that's a possibility and put it over here and see what happens. Because if these companies start failing and they can't keep their obligation of their pensions up, the government will likely step in and do the same thing. Say, hey, guys, don't worry. Universal income, we'll give you some money. Go home like you did COVID. Relax. Everything is cool. And they're dismantling things all the time they're doing this.
Yeah, we're still on YouTube. I was going to bring another argument here with COVID and why perhaps there's a specific tranche of the population, elder population, that was targeted by it, but we'll leave that for another show.
Yeah,
but it ties into this whole scenario you're describing.
And the thing is, JC, like as I've always said, like nobody knows. We just can guess the best we can.
Yeah.
But it's good to just keep an open mind. Like I'm not saying, Bitcoin's going to 1 million. If Bitcoin gives me negative signals tomorrow, I'll say, hey guys, charts are changed because things change, right?
Exactly. Do you want to look at, we're 35 minutes in, you want to look at gold and silver?
Sure, we can do that.
A lot of people were excited a couple of months ago, and there seems to be a little bit of pressure going on right now.
Okay.
Analysts in the last couple of days were suggesting that, we might be just ready now, having shaken out the weekends to get back into this bull run. What do you see?
Yeah, our last show, yours and mine.
Yeah.
Do you remember what we said? No.
No, I don't think so. Which one do you have now, gold or silver?
This one is, that's gold.
Okay.
So let me just refresh your memory. You can go back if you want, check, or your members can.
Yep.
We had a target of $35 to $38 on silver. And we had a target of $2,800 to $2,900 on gold.
Yeah.
Okay. That was our targets. That was back, I think it was in February. It was way back.
Mm-hmm.
So let me go to the chart here and show you what we've got. So what we're seeing here in the gold, it's not as nice as I want it to be, because again, what's happened is we got to 28.
We're just shy of 29.
Yeah, we just got in the zone at 28. We didn't get to 29. And then what happens, of course, when it comes off, what I do is I take the box, which is up at 29, and I pull it back. And now that's your overhead resistance. That means that once we penetrate there, it's game on again for the upside, providing it closes above there. But now we're in a corrective phase. And the problem is, how long does the correction last? Now, if anybody wants to look at the charts, what they can see here is that we had a cup and handle. Everybody knew that in this formation. What I'm expecting is at some point, I'm expecting a pullback to retest this breakout area. Now, it doesn't have to be now, but there is a chance it's coming someday. And it may be on the heels of the stock market breaking hard or something happening. But there's a chance that we could get back into a 22, 24 handle one more time. So short term, it's not positive looking. I've got my indicators here suggesting that the long-term chart is the one that's given us the grief. That's where the problem is. So right now, we could probably correct more here. Our target is around the 25 handle, 2,600. And then from there, we may continue to go lower. We have to get above the 28 that we put in back in November to consider that we're moving to the next level, which is only around $3,000. Now, the nice thing about gold is that when it breaks hard, or the markets break and crypto breaks, like crypto will drop 20,000 in the blink of an eye and possibly gain it half back right away, because the liquidity, as I mentioned before, is not quite there. With this thing here, a massive break might be $300,
right?
Which is not that much. Now, mind you, on a contract it is, because it's 100 ounces. But either way, gold is very slow to move, slow to anger, and it's just continually moving higher. But I am expecting at some point we could see around the 22, 2,400 comfortably again going forward. And again, because if we get in a situation where it looks like we're going into a major recession and we start seeing things like the GDP slow down, everything slows down. That takes away the case for inflation into people's mind, because they figure, okay, the inflation is not running rampant because everything is on sale, because nobody's got any money.
Right.
So, that's basically what I'm saying. But either way here, we reached our target, check back. I'm not sure how long it's going to last, but we get through here again, then it's game on. If we can close above 28, then we're up on our way to the next target. And that I'm expecting that will be in the spring, January, February. You'll start seeing it break up through here. I think we'll be back up in that 3,000 range quite comfortably come the spring, come March or April.
Okay. Let's look at silver now.
Okay, silver. Our target on silver was $35 on your show.
Mm-hmm.
Here you go. 35.07, 2 days.
Yeah.
So anyway, it did what it meant to do. Right now, again, I got this green box. This funnel here is a funnel with a bunch of numbers in it, suggesting something might happen to spook the market, like I just mentioned in gold, and you might get a big push down in silver. Now, we know that can be done very easily by someone like Morgan. Someone like that can do it because that's how they work these markets, and they can go in. If you have an unlimited amount of paper at your disposal, you can look at the market volume and you can see all of the orders that are in there at 31, 30, 29, 28, 27, that lower, and you can go in and say fill them all, and the market just goes woof down through them. And anybody that's in paper, as far as futures, it goes into your price and out the other end, and you're done. Your money is all gone. So that's why it's such an easy market to control, because again, with the bankers or the people that control these markets, they can do what they want. It's like playing poker with $100,000 in your pocket, and the guy you're playing with's only got $20.
Yeah.
So we could get a nasty break. And what I'm saying here is, if it gets down in below this 30, it's probably a good spot to consider buying it.
So what was that target? 27?
Below
signal, or anywhere between 27 and 28?
Yeah, 29 down to 27, anywhere down there. I don't know how low it'll get, but like I have another theory. Now it's interesting that Cliff's in the house, because I know the guys always talk about silver like Bix does and people like that, and they do. But here's a theory, and I'm just going to throw it out there.
Sure.
I do believe that the paper market, which controls the spot, is going to be decimated at some point. It's going to be done away with. But what I thought about, there is a shiny.
Well, since you were last on the show, Russia came out after the BRICS meeting in October, suggesting that they were going to put the LBMA and the COMEX out of the market rigging business. So you're right here. At some point, there's going to be a changeover in this price control mechanism.
But here's a way for your members, if anybody is shrewd enough or astute enough or on the ball enough, how to actually do it. Because if let's say you called Andy tomorrow and said, Andy, I want to buy silver, he would look at the spot price, and that's what he would gauge his premium on, correct?
Mm-hmm.
The same with you, whatever the spot is, or you add your premium or whatever you do. So if the market were intentionally disrupted by someone like JP Morgan, they could actually short everything they could in the market, and this time not buy it back, just let it go, let it collapse, which means they would actually make fiat profit, and then they shut the thing down and you get paid out in dollars. Yeah. Well, somewhere in between there, if it happens in a 24-hour period or a 1-week period, what could happen is you could watch it drop. And let's say you like $18. You could put a price in there for 18. You phone a broker and say, hey guys, silver is at 18. What's your price today? And you could actually capture physical silver based on that final break. Now that would probably be almost impossible to be able to time it, but
you'd have to be on the ball 24/7 to make it happen.
If you see it, it's down into the teens, you might say, hey, it's a good spot to buy silver, because it's not real, right?
But at the same time, your broker might say, yeah, I'm not selling.
Yeah, exactly. Or the premium will be going the other way, right?
Right, exactly. Right. The premium's $100 on the $30 spot.
Okay, so let's see what else we got here. So that's the silver one. Now, I wanted to show you, we were talking before about Bitcoin. We're talking about the dollar. So this is an interesting one. Here's gold in Canadian dollars. $3,880 for gold. Mm-hmm. Okay. We're talking, maybe you're saying about the Canadians and the dollar, what's happening to our dollar. And if I go to, let me just see if I can do this here. BTC, CAD. See if that works. There you go. How about today? We're at $153,000 Canadian in Bitcoin.
Yeah, isn't that crazy?
right?
Yeah.
And it's on a tear because obviously what's going on here.
Yeah.
So is there anything else you want to look at?
No, that's pretty good. And I have another show coming up here in about 10 minutes. Before we go, though, Martee, tell people how they can follow your work here at Bullshift 2020. You have packages there, you have free information on your website, but you also help people in the trading aspects of things. Let them know.
Yeah, so what we offer basically is I've been doing road shows for many years on the road before COVID, and we used to do weekend seminars. We do futures, options, and technical analysis courses. So what we've been doing since 2020 is we're doing the courses live with about 15, 20 max, and then we're taking the video, replicating it like the show, and selling it as a package for about half of that price. Anyone that's interested, because the futures market is going to be a big market in the future. Bullshift 2020 marked the bottom of the futures contracts at that point. So I believe right now we're all hot and excited about crypto, but you got to look going forward with the dollar destruction, the price of energy, the price of food, the price of coffee, sugar, cotton, cocoa, soybeans. Everything is going to go nutso, and there's a lot of opportunity. So if you're interested in the futures, that's one. Second thing I do is I do what we call one-on-one sessions where I look at people's portfolio. Now, I'm not giving trading advice, but I just basically help them. I have people with all their money in their 401k in a passive fund, and I'm going, oh my God. And it's run up like 30% in the past year. I'm not saying it's not going to continue going. What I'm going to say is diversify a bit, like take some of it out, move it somewhere else, and be diversified. That's very important. And then finally, what we have is our monthly subscription service. And what we've done today, if you can scroll down just a little bit there, Jean-Claude, I'll show you what I did for you. We have a bit farther down, right there. We have changed the price today, and this will stay in play till the weekend for your subscribers. You see it over there?
Yeah.
Yep. All eights, lucky eights up the top. Anybody that's interested, and here's the deal. You can try it for a month. If you don't like it after a month, you can cancel it. It's not for everybody. I'm a bit wanky the way I do things. I'm not organized. I just get on and whatever comes out, comes out. So like I said, some people want to do day trading. I don't do day trading for people. It's insanity. It's like going to bingo. It doesn't work. You might win one, you lose one, and your anxiety is through the roof. But anyway, so that's generally, and you see there are the videos. I do 3 updated videos a week like this here for my clients, about an hour long each one. If there's an emergency going on, something big, I'll go on and I'll jump on there and I'll do another video. And then we have free, but there's not much in the free section. All I do is throw them an odd video to show them what we're doing. But we have recommended videos in there. We have educational videos in there. And we have my own videos, and we have special guests. Like we've had Dick on, Andy on, a few other people. And that's pretty much it.
Okay, sounds good. Well, thank you so much, Martee, for being on. Always a pleasure to have you on. And every time you're on, like you have a very good track record in the last year of being on my show with all of your targets. So please, guys, go check out Bullshift 2020. Try the subscription there if you like. Big discount there afforded to you guys today. Martee, last words of wisdom here. A lot of changes, a lot of turmoil coming up. People are a little bit panicked and a little bit scared by all of this. What would you say leaving the show here today?
Wow. All I would say is as far as your wealth, the main thing, in my opinion, is diversification. Nobody knows what's going to end up being there in the end. So I would make sure I'm diversified. If you're doing real estate, the only thing I would say about it is, depending on where you are, make sure you don't have a heavy mortgage. If it's paid off, it's a good investment. Personally, I think it's good. It'll give you money. But if you have a big mortgage on it, I would be careful with that. You don't want to get caught robbing Peter to pay Paul. Cryptos are good to have. Bitcoin is my favorite, meaning it's a store of value, at least for now. I have some altcoins that I trade because I want to get that maximum, X factor in there.
Right.
Gold, physical silver. Stay away from the paper markets. They'll destroy you anyway.
Yeah.
And you know what? Things should work out. We should get through this. We're starting to see some good light coming down through the tunnel, and a lot of people being exposed. And personally, I believe it's all going to be exposed anyway. And that's going to be fun times because they're going to have to account for what's going on here.
Gonna be fun times. Guys, if you're looking at getting some silver in your own possession, also please go to beyondmystic.net/silver. There you'll see that Andy still has the junk silver on sale for you guys there at $189 over spot. One of the best price out there, bar none. So thank you for watching, everyone. This was the Beyond the Charts episode with Martee Hibbs. Please join me again in about 10 minutes for the next edition here of the Drone Wars, Trump versus Bloombeam. I'm going to have Kerry Cassidy on with me here in about 10 minutes. So guys, I'll see you again later. Thank you so much for watching, and we'll see you soon.
Take care. Bye-bye.